In the past, China's high-speed economic development was largely attributed to the government-leading investments. However, economists worry about the huge amount of loans released by Chinese banks in the process. They say those loans may turn bad and create banking sector chaos, and financing activities have gradually moved to the shadow banking sector. What are the risks to shadow banking in China, and how to reduce the risk of financial instability? Here are the top experts' voices.
Shadow banking in China has expanded rapidly in recent years. For instance, trust assets surged to about 10 trillion yuan by the third quarter last year, up 60% on the previous year. Chinese banks are only allowed to offer official rates to depositors, and those rates are flat with inflation, which has left Chinese savers ready to turn to other investments. Banks are banned from lending money to industries with overcapacity or local government financing vehicles. When borrowers from these categories knock on a bank's door for money, they will be offered a high-interest loan from other funding channels. The money is often raised through banks' networks. As a chunk of non-banking products are due later this year, the market fears the wave of defaults may weaken investor confidence in the shadow banking system and clogging money pipelines. Experts note the liberalization of interest rate may help to reduce the risk of shadow banking. Jill Foudy from the New York University told CNC World that the interest rate liberalization in China will lead the returns of depositors go up.
There's big risks in shadow banking, but the interest rate liberalization they're talking about will help in this regard. As soon as it's possible for returns to be set by markets for interest rates. So as you see interest rate liberalization in China, you're going to see the returns of depositors go up. And many of the people who've put their money into shadow banking will feel more comfortable taking that out and putting it back into banks.
Jonathan Pollack from Brookings Institution says it is important to give people some more meaningful return on investments.
And basically a reckoning on how all these monies have been allocated and whether or not you can begin to curb that process, raise interest rates, give people some more meaningful return on investment rather than just simply see their savings sucked away to go into the interests of these major state-owned companies.
Last month, rating agency S&P said Chinese banks' earnings are likely to decrease this year as they make increased provisions for bad loans, along with a narrowing spread between deposit and lending interest rates and slowing growth in non-interest rate income. But still, the agency noted the decline in loan quality will not be too bad, as a stabilizing domestic economy and pragmatic policy responses to deal with emerging risks should limit the rise in non-performing loans. S&P said the credit profile of the major banks erased in China will remain stable. Meanwhile, experts are positive on the banking system. Bank of China Hong Kong, or BOCHK, Chief Investment Manager Hu Ka-lam says the capital base of the banking system in China is still very solid.
I think a lot of international investors may have been too bearish on the banking system in China. Of course, we all understand that the non-performing loans in China may most probably rise, but they will rise from a very low base. And also the capital base of the banking system of China is still very solid. And also don't forget that the central government of China still have a lot of financial resources. We are talking about more than $3 trillion sitting in the reserves of the central bank in the central bank of China. And also the liquidity reserves is huge in the commercial banking system of China.
The chief investment manager adds the shadow banking in China accounts for a fairly small percent of the GDP, and Chinese authorities have been implementing a much tighter regulations to govern the transparency.
And talking about the shadow banking, and actually the shadow banking is not a unique problem or a unique phenomenon to China. And we estimate that the shadow banking only accounts for, in China, only accounts for about 30 or 40 something percent of the GDP of China. However, if we look at the US or Europe, the shadow banking systems account for more than 100 and 200% of their GDPs. And more importantly, in the last 1 or 2 years, we have seen that the central government or the authorities in China have been implementing much tighter regulations to govern the transparency and also the corporate governance of the banking system in China.
According to a recent report, Chinese regulators are strengthening their supervision over the country's shadow banking system. The regulators will specify the supervision authorities for each type of the shadow banks in accordance with the principle. China's central bank, the People's Bank of China, will work out supervision rules over the third-party wealth management, asset securitization of non-financial institutions, and internet finance activities. The regulators will also enhance information statistics and sharing in supervision of the shadow banks. At the ongoing political sessions in Beijing, Mei Xinbao, a member of the Chinese People's Political Consultative Conference, gave suggestions on how to improve the financial regulation system in China.
About reform, I will give some micro-coordination suggestions on financial regulation system. With the development of internet finance and microfinance, the management system should come up with some new thoughts. What I am concerned are how the central bank to complete and strengthen the coordinate and supervision functions, and now the central bank to enhance its authority.
The CPPCC member also suggests the local financing management authorities, such as financial offices, to strengthen supervision of small loan companies and bonding companies, as well as to centralize management authority. Meanwhile, economists say there will be growing confidence in traditional banking sectors.
China is working on things like deposit insurance. It's possible you could even see that this year. All of that will lead to more confidence and more traction in traditional banking, so that some of the shadow banking effectively becomes official banking. In the meantime, many of those loans could go bad. And the question is, what would be the economic impact if you start to see lots of losses at many of these funds?
Experts argue that more transparency in banking system productions are needed in order to reduce the risks of financial instability.
What China really needs is much more specificity and transparency on the nature of these transactions, disclosures on where monies have been allocated, how this process will be controlled over time. This is one of, in a high growth period, with the high growth mentality, sometimes even double-digit growth, the presumption was the more you spend, the better it will be. There is now much more caution.
Pollack adds, it is important to check how money has been allocated and how to make sure money doesn't get out of control again.
This is CNC World, a new perspective.